Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've got the moves down the alert levels across the country and now in Auckland as well. We're starting to see the economy unlock a little bit more after this Delta variant has moved in, after the Delta lockdown is working its way through. I mean, what are we expecting in terms of a bounce back? We had a good result last year. Are we expecting something similar this year? Or are businesses at the end of their tether and are we seeing this greater uncertainty really starting to sap the strength of the economy?
Yeah, last year in terms of trying to forecast what would happen to the economy after lockdown, we were very much flying blind. This time we've got a little bit of experience to draw on, and hopefully that experience stands us in good stead. I mean, our view has been that the labour market, well, that's holding together pretty well when all things considered, certainly a lot better than we saw last year. And of course, remember that the labour market was very tight heading into this lockdown anyway. Business or consumer spending rather, that bounced back very strongly, a bit of a sugar rush or a sugar hit as people talked about last year, expecting similar things to come through this year as well. And yeah, so all in all, I would say that things are on track. I mean, what are you seeing particularly in the numbers around spending?
Yeah, we have seen a pretty good bounce back so far, and I think that is what is convincing us or providing that confidence about the bounce back. Let's be clear, the bounce back is on. Across the rest of the country outside of Auckland, we've seen spending activity over the first 17 days of level 2 or level 2 Delta up around about 6.5% above normal 2019 levels. So we are starting to spend a bit more. We've amassed about a $1.3 billion hole in spending, but I'm not going to say that spending that's lost. It really is so far spending that's been delayed. The challenge is very much about how quickly can we regain that and how a business is going to be faring. And on that front, we are seeing some real mixed bags there in terms of, we know throughout lockdown, we've had the likes of the grocery stores and similar doing incredibly well, up around over 10% above normal, even throughout lockdown. People have been making sure they are still well fed, very important, and really, making sure they've got enough toilet paper and similar. One of the other challenges we have, though, is very much in the hospitality sector. We know that is one of the hardest hit at the higher alert levels, but even at level 2 Delta, we were seeing that spending outside of Auckland at level 2 Delta was still around about 25% below normal levels. Now, because most hospitality operators are operating on sort of a 10% profit margin, they're still quite hard hit. That's a huge amount of money that are still not bringing in. Even at level 2, with a larger cap of people coming in, the numbers don't look fantastic. What we are seeing, though, is that people are again making sure that their homes are fit for purpose if Kiwis are going to spend longer in them. Home and recreation spending, including Auckland, so including no one in a third of the economy able to spend, still up 70-odd%, which means that outside of Auckland, at level 2, we could well have seen 160% odd spike in spending on the first day of level 2. People were going out and getting paint. I think you were one of them over the first week, Gareth. People were getting out there and spending. So there's certainly still confidence. The consumer confidence numbers are also not showing too bad of a hit in many regards. And the early results coming in from business confidence surveys are also showing that people are at least confident enough that the bounce back will happen once again. I'm a little bit concerned, and I think generally we should be a little bit concerned about the 8,000 odd additional job seekers that have come through in the last few weeks. That's a setback of around about 4 months. But again, we've still seen that hiring numbers are still relatively firm. We've seen a bounce back in job ads. Weekly job numbers haven't shown anywhere near what they did even during the first lockdown. So the heat that we were having in the economy pre-lockdown, I think, is coming forward again. I mean, what is the risk, though, that all of this is the straw that breaks the camel's back for some parts of the economy? Auckland, for example, this is their 5th lockdown, and they've been there longer than anyone else. They've been at level 4 longer than any other part of the country, even longer than the original lockdown. That does, at some point, you expect, start to weigh on some parts of the economy.
Yeah, I mean, look, there will have been businesses who burnt through a lot of cash during last year's lockdown, and they were supported, of course, in part by the government, whether it was the wage subsidy or other business support measures. but still would have, as you said, many businesses, or particularly in that hospitality area, would have been making losses, and they may not have the cash to continue going out the other side of the lockdown that we've just been in through the last month or two. So I think there are issues there. What I think, look, we saw originally for the first lockdown and the sort of after effects of that there were significant distributional differences in terms of the impact at that time. And you had, white collar workers such as you and I who just keep on going. We were able to work from home, and in fact we had more work than we knew what to do with. Sometimes we were really busy through that period, whereas of course other businesses and other people, they simply couldn't work, and they were being hit, and particularly through some sort of industries and businesses, obviously some significant job losses occurred last time. We haven't had the same degree of job losses this time around, but I suspect that they are actually even more concentrated in some respects in terms of both those business impacts and the labour market impacts. So while most people are doing fine and they're happy to go back out to Briscoe's and Mitre 10 and spend on the house, like you say, there will be some people who are doing it very, very tough, and we do have to be, mindful of that small portion of the economy. But I think overall, when you look at the numbers, I'm still relatively confident that the rest of us keep trucking on. And to be honest, that unemployment rate of 4%, it's probably going to be lower in coming quarters rather than higher, even with that lift in job seeker numbers that we've seen. So overall, still pretty confident that the economy is holding together well.
Yeah, absolutely. And I think you're right in terms of that distributional impact. We know from the wage subsidy numbers so far that sort of trend is bearing out. We know, for example, hospitality and construction firms taking, I think, over 90% of both of those workforces covered by the first wage subsidy, sort of similar to the levels we saw last time. And we know that group is incredibly hard hit. We also know, though, with the move down to alert level 3 and level 2 in different parts of the country, that construction activity has been able to get going. And so for the subsequent wage subsidy rounds, we're seeing a greater concentration in accommodation and food services and some of those other tourism-based parts of the economy, which is exactly what we might have expected. We're also seeing, though, I think you're going to see some smaller operators that just haven't been able to sort of have the war chest behind them, or the sort of the strategies and abilities to move through as much. A lot of the larger businesses have not taken the wage subsidy as much or at all this time round. Part of it's going to be perception, not wanting to lose some goodwill. Part of it's because they're already in a profitable enough position, but also part of it's going to be because those larger firms have been able to battle on and turn a good profit over the last year, are starting in a stronger position. So I think you're absolutely right that, look, there is on average still a strong bounce back. That spending impulse is positive, but there's still those distributional hits. Not everyone is going to come out of this unscathed, but hopefully the net effect is not as limiting as we were fearful of last year. The evidence around New Zealand's ability to come back from these hits is certainly, I think, still well-founded. But we'll continue to assess that bounce back, how things are going, and what different groups are being hit on one of our future editions of Econ Talks.